Hello, ladies and gentlemen. Welcome to NIK NIKAM. Today, I would like to talk to you about life insurance for your adult children. They finished the college, they graduated, they're getting married, and they're starting a new family. And of course, this is the best time to consider a life insurance for the young new family. I'm going to show you two different types of life insurances, what it costs in the long term and what the benefits are. Basically, there are three types of life insurances, namely term life insurance, where the premium goes up each year. Then we have the whole life insurance, where you can pay 10 or 20 premiums and after that you don't make any payments. And of course, we have the universal life insurance, which has variable premiums and which is something you can invest in indexed funds, things like that. So first of all, let us take an example of a 30-year-old adult who has just graduated, who's gotten married, and is ready to start a new family. The best gift you can give for your child is a life insurance, preferably a whole life insurance. And I'm going to show you what the advantages are. So let's look at some of the terms here. So we're going to look at a face value of $500,000, level premium for 20 years, and we're going to compare a life insurance cost from age 30 to 65 years using a term insurance and a whole life insurance and see what the benefits are at age 65. That is 35 years from the time we start the policies. Riders are some things that we can add on. We're going to skip all those things and now we'll come back here and see what the cost is going to be. At age 31, the premium is pretty reasonable, $574. You're getting $500,000 life insurance, which is very good. But as we go down the line here, you see after age 50, after 20-year level premium, it suddenly jumps to $4,550, 10 times more than. And if you look at the cumulative premium paid up to age 65, you will see the cumulative premium is $136,000, $380. So at the end of age 65, you have a life insurance coverage up to $500,000. But by the time you reach age 66, unless you continue the premium, you do not have a life insurance. So the $136,000 you paid is like a homeowner's insurance or an auto insurance that you never used. The money is gone for good. You do not have any more life insurance as such. Remember this number, $136,000 and change. So we're going to go and try the same with a whole life product and see what a big difference. So here we're going to come to whole life and we're going to select this whole life, custom whole life. We're going to keep the age same. Then we're going to go to the basic policy here and we tell them we need 20 fixed period payments for the whole life for $500,000 from age. So 30 to 50, you'll be paying a fixed premium and then we'll see what the benefits are. So we got this one. So we don't want any kind of riders as such because it's a young family, except for the paid up option, which gives you an option to buy additional insurance or prepay your insurance. Keeping that in mind, let's look at the illustration here. $500,000 life insurance, yearly premium is $8,781.87. So if you look down here, this is yearly premium you're paying, and this is your cash surrender value. And at the end of 20 years, you have a cash value of $160,000 and $160,480. That is, if you surrender your policy, or you can get a loan for $160,000. That is based on the guaranteed value. However, a non-guaranteed value can be much higher, but we're not going to look into this at this time because I just want to compare the difference between term insurance and whole life insurance and what a great gift you can give to your adult person. So if you come down the line here, so this is the cash available to get loan. Can you imagine you have a lifetime death benefit of $500,000, which is guaranteed because you already paid the premium, and say like 20 years from now, you need to borrow some money to buy an automobile for your teenager, for their teenager, I should say, or you want to get something else, you want to do a postgraduate studies, you can get tax-free loan, $160,000. You don't need to apply for a loan, collateral, and all kinds of signatures and all these things. You just call your agent or call the main office, and the money will be electronically transferred to your account in 24 hours. So that's the beauty of the whole life insurance. Plus, you have a lifelong $500,000 benefit in the event some unfortunate thing happens, and the benefit continues as long as you're alive up to age 100. And look at the cash value accumulates at the same time. Let us compare the term and whole life and see what is the actual cost of this whole life, even though it looks like a huge amount. We said the premium was $8,705 per year for 20 periods. The total premium we will pay would be $174,100. Premium of a cash value life insurance, which is term insurance, you would be paying $136,380, and your life benefit stops at age 65. Beyond 65, you have no life insurance coverage with term life insurance. So this is the basic amount you have to have life insurance up to age 65 for $500,000. Now, the premium you're paying for the whole life is $174. Say even if your premium were to be growing 2% in your cash account or your CD and bonds basket, even if the money was worth $215,000 and $215,739 at the end of 20 years, and when you subtract that with this term only insurance, your actual cost of whole life insurance is only about $80,000. Now keep that in mind. Your total cost was $80,000, and you're getting a $500,000 life insurance for good as long as that person is alive. In addition to that, you're also having this cash value built up. As a result, in the long run, your whole life insurance is far more valuable in protecting you for lifetime and returning cash, which you can take as a loan with no questions asked, and you don't have to return this loan as long as there is enough money to keep the policy in force. This is quite different from universal life insurance, where it has an annual renewable term policy. That means it is just like a term policy on top of an investment product. It has advantages. It is useful in certain circumstances, but for general purpose, I think this is a great way to gift our young adult children so that they don't have to be worried about their life insurance. They don't have to be worried about putting $8,000, $9,000 a year. And this is something you can do, which you can give as a gift, where it is not going to incur any kind of taxes. As a result, they have protection, and they can withdraw money whenever they want after the first 20 years. We always have some amount of money reserved for retirement, and some of that 20-30% of that money is in like bonds and CDs, which may be getting you 1% or 1.5%. I would say I would take that money and invest some of it, not all, into a whole life insurance for your children, because whatever money you're saving for retirement, hopefully you never have to use it and you want to pass on to your children. And a great way to pass on to your children is to start a whole life insurance at the earliest stage, so the premiums are lower, the cash accumulation is greater, and they have a lifetime insurance. This is a great product compared to term insurance, and this is something they will be thankful to you, because when they need cash, there is readily available cash they can take as a loan on their whole life policy. Thank you so much for watching this presentation, and if you have any questions, or if you would like to compare this to universal life or any other type of insurances, we'll be happy to compare them and show it to you, because there's nothing that will return this kind of cash combined with a lifetime insurance. Think about it. All the money that we spend here, which is one-way track, we spend $200,000 for a college. There's no guarantee they're going to have a job. There's no guarantee they're going to have, $500,000 saved. And the wedding, we spend $100,000 for 3 days. Your whole life insurance costs far less than these expenses, which we don't even think about when we are spending. What do you think? Thank you so much for watching.